Hello everyone, Kolonji Murray with TaxAssurances. Just wanted to do a helpful video about using a car when it comes to business. And this typically comes across or happens in my business, in the tax preparation business, when it comes to like Uber drivers or Lyft drivers or any of the rideshare companies that are out there. The drivers are actually using their car part-time to, again, deliver people back and forth, the food back and forth when it comes to, the professional business that they have. So again, it's, Uber or Lyft or whatever. But one of the things that they also do is they use it for personal use. So it becomes somewhat tricky to be able to figure out how to split that expense. So I just wanted to kind of give some a little bit of help, some tips on ways that you can kind of, if you're doing that type of business, be able to track those expenses. So there's a mileage way, and then there's the actual cost way. So the mileage way would be just simply using one of the online tools or an app or something like that, where you're actually able to figure out how many miles you're actually driving for the business. Again, separating out personal use. So if you're taking your mom to the grocery store, if you're taking your sister to band practice or something like that, and then you're driving, the band practice and the mom driving stuff, you cannot deduct. But if you're able to track the mileage, the actual mileage that you are driving related to the Uber or Lyft or other ride sharing companies, that is what is called, again, business use of the car, and you're able to deduct that. Every year, the IRS gives guidance on how much per mile you can deduct. So the important part for anyone that is doing that is obviously, making sure they're figuring out how many miles they're driving every year, so they can track that and be able to deduct that on their tax return. So that's one potential method that people can use. The other way is doing the actual expenses. So say, for instance, you're paying for gas, you're paying for tolls, you're paying for car insurance, you're paying for car repairs, you're paying for ownership of it, and you get something that's called depreciation. By tracking it that way with the actual expenses, again, that's another way that you want to make sure that as long as you're using it for business purposes, that is something that you can deduct. So again, you're going to want to kind of track that and make sure. And a lot of times what it may come down to is percentages. So say, for instance, let's say that 30% of the time you're using the car for business practices, or even vice versa, maybe 70% of the time. And then the other 30% you're using it for personal usage. You would be able to deduct 70% of, let's say, the car insurance, or 70% of the car repairs or something like that. That's how that would kind of work there. Once again, you're tracking that, making sure that you're capturing all of the business-related expenses that you have for that. So keeping notes and tracking everything is critically important. That way, if the IRS ever wants to audit you, you've got records that are going to show how you came up with those numbers. So that, like I said, is an important part of this overall process. But ultimately, what you'll do with someone like me is we'll sit down and figure out, is it more advantageous to do the mileage calculation, just simply the miles, or is it more advantageous to do the actual expense calculation? So we would do that, look at both of those, so tracking both of those helps us figure out which one gives you the best bang for your buck. And whatever that is, we can take advantage of that and put that on the tax return. So that the way that would work is we would look at, obviously the revenue that you made with the car sharing company. So again, if you're getting a 1099 from Uber or Lyft at the end of the year, or another ride sharing company, you're able to kind of, they're able to kind of let you know what you made. But then we would take that expense. So again, whether it's the mileage or whether it's the actual expense, we would be able to figure out, okay, great, you made $50,000 for the year driving, but let's say, for argument's sake, that the if you're doing it by mileage, it's say, I don't know, $5,000 of a deduction, and then let's say for actual expenses it's $7,000. So obviously it's more advantageous to take the $7,000 expense. We put that against the revenue that you made with the ride sharing company, and that becomes a deduction, which helps lower your tax liability. We're also going to look at any other expenses that come with that, but as it relates to just using the car for the business, that is something that is allowed, that is something that can be calculated. It is somewhat tedious, but it's something that, again, is allowed that you can deduct, and we want to make sure that we want to track that. Obviously, if you've got more questions, by all means, reach out, and we'd love to help.